Do you watch emerging markets much, Gareth?
I do a little bit, yeah. Hang Seng, Brazil, some of the other ones, yeah, absolutely.
So do you think in a rate cutting environment, maybe based off some of the stuff we talked about thus far, there's a decent chunk of the American economy that's desensitized to rate increases and therefore desensitized to rate cuts. Emerging markets would be the exact opposite because they hold short-term debts. They're very subject to those rates. And so there could be some big winners. There's been some big losers in a high rate environment. And so the inverse is probably true. Which are there any markets you're specifically interested in or bullish on?
Yeah, so there definitely is, and just looking at this EEM chart, I mean, you could see back in 2020 it was all the way up here, and it has recovered off the lows, but it's still well off well off the highs at this point. So to me, this is actually where I think the interest should be for investors. So what we've seen is since 2009's lows, we saw money flooding the U.S. markets, which has been part of the reason why valuations have gotten so high. Is it's not just U.S. money, but global money rushed in. The Fed is the best. They know what they're doing. They're the most trusted central bank. The U.S. economy is the best in the world. And I think it's over allocated in the U.S. And what I'm looking for here is actually emerging markets to start to do a lot better. Partially, I think the commodity trade, right? I think if these metals, if gold does better and better, that's really going to help a lot of these. Uranium is an interesting one as well, as it's getting really low. Even lithium, LIT is a ETF, and I'm tracking this trend line right here. We haven't broken out yet, but I mean, this thing has been absolutely crushed. And obviously lithium goes with the EV trade as well, which hasn't done very well lately as well. But the idea here is that emerging markets should see a reversion. So all this money flowed into the U.S. When the U.S. starts to stumble and the Federal Reserve admits that there's a recession, there's going to be a little bit of a confidence loss factor. And I think also the interest rates being lower is going to drive money into these other economies. So I like Brazil. Obviously, Brazil has a bunch of issues right now as well, but other ones like that, Brazil and some of the other South American countries, anything that's basically trading far down. I even kind of, believe it or not, I kind of like the Hang Seng market and the China market here. If we bring up this chart, the chart is actually very attractive. I mean, so far off of its all-time highs of 2018. And here we are at the low end here. And I think, again, China could be a place that people say, okay, it's already been discounted. If you look at Alibaba, Baidu, a lot of these companies, 8 PE ratios, 8 versus Microsoft at 32 or 35, right? So there's the valuation has already been subtracted from these names. Now, granted, Taiwan is always the elephant in the room. Hopefully it doesn't happen. But aside from that, this is where you want to kind of look for that next leg up in a market.
Yeah, interesting. I was chatting with Lynn Alden recently, and she had a very similar take on Chinese equities. It's always notable when a couple of guests are aligned on something, a thesis.
That is interesting. Yeah. She's great at what she does too. She really is.
Yeah, 100%. Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode. So tying a couple of these things together, the Fed is sort of stuck here a little bit. They are very much impacted by high rates that they set, and then they have to pay interest on their debts. And, the whole concept of fiscal dominance, we're sort of entered that spectrum and continue down that path. It seems to be sort of a one-way street at this point. So in response to the rest of the world watching this occur, trends in central bank gold buying, You think this is something we'll continue to see? Will this, we're halfway through the decade. It's been a crazy decade. We're only halfway through, but every year something major's happened. And I have reason to think that that's probably going to define this next 6-year period. Do you see continued decoupling from the US dollar as a trade currency and a reserve currency for more economies around the world and looking to hedge their bets in either more diverse currency holdings or the lifeboat that is gold? What's your take on that trend, Gareth?
Yeah, I do think that trend continues, but I would just caution investors to understand that it's a very elongated process.
Yeah.
So it's not something that occurs. There was so much hype earlier this year about de-dollarization and this and that. And what we know is that the dollar is kind of the most slow moving thing out there until it isn't. But it has to get like the biggest moves in markets, right? When a market tops, it slowly kind of moves down. It's only at the very end where it collapses. And I think that's something to remember. So my guess is 5-10 years out, but yes, it will continue. I think that you have this kind of protectionism type thing that's taking over, right? I mean, we're seeing, the tariffs with China, these other countries, we got to produce everything here. They want to produce stuff there. That's going to cause this feeling of okay, we have to be off the dependence on the dollar. So I do think it continues, and I do think it pushes more people to gold. And then, the bigger question is, will it eventually push it towards Bitcoin as well? And that's really up in the air at this point.
Okay, let's wrap with that one because you've usually got an interesting take on Bitcoin outlook. So what are you watching right now?
Yeah, Bitcoin. So Bitcoin's in a tricky spot right now, and I'll flip up to my charts here so we can take a quick look. Is that basically you're holding steady in what I would consider a weak short-term position. So we have our pivot line here, right? And the pivot line means that if your price is above it, that's bullish. Below it, it's bearish. Now, we have this bigger channel. So you have a parallel line here, a line here. This is parallel up here. That, if we fall, is your support level. That's support 1 and support 2. As long as we stay in this general range above 49,000, Bitcoin would be viewed as being slightly bullish here with upside potential over the mid to longer term. I do worry, though, that if the stock market drops like I think it could, just like gold will fall, Bitcoin will fall as well, as people just sell and ask questions later. Now, like gold, I expect Bitcoin to recover quicker than the stock market. But I do think, again, the big thing for me is if it breaks 49,000, watch out below. You could be headed into the 30s.
Okay. And that's sort of near-term outlook, long-term, still very bullish, Gareth?
I do. I mean, there's always the unforeseen. And I think as an investor, again, it's all about allocation, right? So I do have a little bit allocated to Bitcoin, not tremendously because it's still relatively new, but I can totally understand why people want a form of value, of digital gold, if you will, that diversifies them away from currencies, from fiat currencies. And gold does that, right? But it's a little different. People don't look at it as digitized as maybe it is or could be. And I think Bitcoin fills that mold. And I think the fact that institutions are adopting it more and more, it does lend it to be more credence filled and likely to survive and thrive.
Okay.